We've previously covered what Bitcoin is, discussed its digital scarcity, and why I think it should be a part of your financial independence journey. In this video, we'll go over the stock to flow model, which has become a core framework for understanding Bitcoin's price action and has so far had a strong record of nailing price movements. I'm Corey, and on this channel, I help you decode technology and innovation to grow your wealth on the journey to financial independence. Let's get into it. What is the stock to flow model? Why has it been revolutionary to help you understanding the price action of Bitcoin? And what is the stock to flow model saying now? And what does that mean for your money? In my prior videos, I discussed Bitcoin and how it is a digitally native store of value similar to other financial assets. I will include a playlist link later in the video and in the show notes in case you want to check those videos out. I also have time codes below in case you want to skip ahead. I previously discussed Bitcoin as being engineered to have predictable, pre-programmed token economics, a fixed supply, and an architecture designed to resist being captured by any specific nation state or wealthy group. In this video, we'll go over what this all means and why the stock to flow model is the first model to put these elements into a digestible context that matter for your money. Plan B. Plan B is the anonymous former money manager or financial analyst who created the original stock to flow model back in 2019 with the goal of creating a mathematical hypothesis to explain why Bitcoin's price should go up significantly over time. This hypothesis was explained in the stock to flow model in detail. The goal of the stock to flow model was to attempt to put a value on Bitcoin as a digitally native scarce asset. Since the dawn of humanity, gold has always been the ultimate scarce asset that is considered a store of value as opposed to cowrie shells or other items for barter like livestock. These were made obsolete historically as mediums of exchange through a combination of new technology and humans' tendency to overproduce or flood the market with such items, causing their price to crash. So what is the stock to flow model? Stock to flow model seeks to put a value on Bitcoin's scarcity, and to do this, Plan B has cited previous works on scarcity in the context of gold by Nick Szabo, who stated in his prior work, BitGold, that previous metals and collectibles have an unforgeable scarcity due to the costliness of their creation. This once provided money, the value of which was largely independent of any trusted third party. So citing Nick Szabo, Plan B looked at Bitcoin as unforgeable costliness, because it costs a lot of electricity to produce new Bitcoins in the same way it takes a lot of time and effort, energy, money to produce gold or silver. Producing Bitcoins cannot be easily faked. So note that this is different for fiat money or printed money, and also for some altcoins which do not have any supply caps. They don't have a proof of work model, they have lower hash rates, and they have a small group of people or companies that can easily influence the supply. I'll do a separate video on ESG and electricity and the questions around that because that's kind of a broad topic. Let's use gold to show a real life example of what the stock to flow model means and what it's trying to do. If gold has a stock of 185,000 tons and a flow of 3,000 tons, flow refers to the annual amount of gold actually pulled out of the ground. This would derive a stock to flow ratio of 61.6 or 62 rounded up in this example. Silver in the example has a stock of 550,000 tons and a flow of 25,000 for a stock to flow of 25. So why is this revolutionary? What makes stock to flow so powerful is that it is really just a hypothesis backed by data that Plan B released to the world for review and critique. The reason I'm talking about it here is that the hypothesis has been proven very accurate since it was first published, and actual market data and performance have backed it up. As you would imagine, many market participants are watching every movement in Bitcoin price above and below the price predictions of the stock to flow model, and we're getting real-time peer review, so to speak. In 2019, the original stock to flow model was released by Plan B, and in his conclusion, he stated, the predicted market value for Bitcoin after May 2020 halving is about $1 trillion, which translates to a Bitcoin price of $55,000. Right now, the model has proven to be directionally correct, with all-time highs thus far in 2021 being at $64,000. And the original stock-to-flow model predicted a high of around $55,000. Next, building on the stock-to-flow model, Plan B also released a stock-to-flow cross-asset model, and this looks at Bitcoin, silver, gold as financial assets. The stock-to-flow cross-asset model is a bit more dynamic than the original stock-to-flow model and builds on its core thesis that we're able to mathematically model the step function increases in Bitcoin's price. What really got people's attention, given Plan B's track record, is that this new stock-to-flow cross-asset model calls for a new Bitcoin price in the range of $288,000 per whole Bitcoin between 2020 and 2024. I think if we get anywhere near these levels, I expect Lamborghini, Rolex, and diamond dealers around the world to do very well. For those more technically focused that want to get into the nitty-gritty of the details in the model, I will include links below in the show notes to show Plan B's models, and you can review and form your own conclusions. So far, time has proven the robust nature of Plan B's analysis on a directional basis, even though it's impossible to be 100% accurate since it is just a model. On the other hand, Fidelity Investments and many other financial institutions and Wall Street players across the globe are borrowing from, building upon, and using the analysis that Plan B created, which is why these models matter. Many believe we are months away from major investors front-running these models and buying positions in Bitcoin as a low-risk, high probability bet. By small, I mean hundreds of millions up to billions of dollars, because we're talking about institutional level investors. So does this knowledge make you want to get off your zero position? Let me know in the comments below. Another thing that is really making people stop and pay close attention is the fact that Plan B has not just been right directionally, but with respect to the monthly price floor closes. For example, the most recent Plan B tweet about this and his updated models shows the highest probability of the lowest market closing price on a month-by-month basis. If we take a look at what Plan B has noted publicly for the last few months, it becomes pretty clear that the model and the analysis has actually been pretty accurate. It is particularly interesting when you look at what the model is saying the monthly price will be on a going forward basis. For August, September, October, November, and December 2021, the model is predicting ever higher prices at the month-end close. And if this model proves to be accurate, buckle up, because who knows what's going to happen. In case you have not seen my prior videos on Bitcoin, make sure to check out the playlist above. Join me on the path to decoding technology and innovation to grow your wealth on the journey to financial independence. Don't forget to like, share, subscribe, and hit that notification bell. Until next time.